Hey, what's going on, guys? It's Lewis here with Crypto Elite, and in today's video, we're going to be going over the basic, fundamental, core attributes of a trading chart and what you need to know if you want to trade cryptocurrencies or trade Forex or trade anything for that matter. So that means that we're going to be going over things like candlesticks, trend lines, support, resistance, and basically everything that you need to know in order to trade cryptocurrencies. By the end of this video, you should be able to pull up any chart on TradingView or Coinbase and be able to read it and understand what you're actually looking at. And obviously, this is crucially important if you are going to be buying, selling, or trading cryptocurrencies, because you need to know whether or not it's a good time to get into or out of a trade. And knowing this knowledge, which in this video, will help you determine whether or not it's a good time to get into or out of a coin. So I'll take myself off the screen now and get to the presentation, and I'll see you at the end of the video. All right, so right here we have a standard graph. This is the graph for Bitcoin, and it is the Bitcoin and USD pairings. You could see that right up here, Bitcoin/USD means that this is the Bitcoin graph, and it's paired with the United States dollar. And this is for GDAX, so this is using the information from the GDAX exchange. And let's go over it. So as you can see, there are a lot of tiny bars on this graph and some big bars. These are known as candlesticks. Each specific bar is called a candlestick. And what candlesticks are, they're the average measurement of the buy and sell orders over a period of time. So right now I am on the 1-day chart. And so each candlestick represents the buy and sell orders over a period of 1 day. If there's a green candle, that means that the price ended higher during the time frame that you chose. If it is a red candle, then that means that the price ended lower during the time frame that you chose. More green candles equals a bullish momentum, and that means that the price is going up. And you could see that right here by this arrow going up. That is bullish. More red candles equals a bearish momentum, and that means that the price is going down, and you can see that the price is going down, and that is what this red arrow represents right here. And I'll move this out of the way so you could understand what that is right there. Now, like I mentioned before, each candle represents whichever time frame you choose, and you could choose the time frame right here. So candles finish forming once their particular time frame is done, and then it moves on to the next candle. And you want to look at the full candle to have a good picture of what it's going to do. And you could change this from the 1 day to 12 hours, 6 hours, all the way down to 1 minute. And the thing to know is that the shorter the time frame you use, the more volatility that you'll be looking at. And the longer time frames, such as this 1 day, that gives you more confidence in the market and what direction it's really going in. So if you want to have more confidence, use the 1 day, the 3 day, the 1 week. Those things will tell you what's really happening in the market. And then for shorter trades, you could use the shorter time frames. So you might notice that on a lot of these, or basically all of these candles, there are these things that are just pointing down, and they're really, really small or very, very thin. These are called wicks, and the top of the wick is the highest buy price of that particular time frame. So I'm in the daily time frame. This is the daily candle chart. So at the daily candle chart right up here, which was around $19,642. That was the highest buy price for this day. Likewise, the bottom of the wick is the lowest buy price. So this lowest buy price for this day was around $10,392. So like we said before, green candles represents a bullish trend where the price ended higher during the time frame that you chose. So that means that it opened up right here, and then it closed right here. So it opened up right here, and then it closed right here. It means that the last price, the ending price, the closing price is a lot higher than the opening price. And the opposite of that would be the red candle, where the price ends lower during the time frame that you chose. So that means that it opened up here, but it closed down here. So there was a lot of selling, and it ended up closing at a price that was a lot lower than the opening price. Now let's just zoom in so we could see and get a better picture of the next thing that I want to go over, which is this right here, this is one candlestick, right, for one day. So the candlestick, the big part of it, that represents the price, say 80%, the average price changes during that time frame. So around 80% of the trades, maybe more, were all within this price range right here. So between around 14,170 and around 15,730. This is where the majority of the buys and the sells happened. And then the wicks, these are the outliers. This is where 10, maybe 15, 20%, if that, of all of the volumes of the trades happen during the wicks. And these things represent a very low amount of volume and a very quick. They happen really quickly. It's usually just like bloop down and then right back up again, or bloop up and then right back down again. So you need to be careful about these wicks. And if we move and we go in over here, I got some more examples of a few other things that you need to know. So basically, the longer the candle is, the more volatile it is. And that means that the price range fluctuates a lot more during the longer candles. So like I said before, like this one started, or this one was all the way at 4,800, and then it was trading all the way between 4,800 and 5,400, right? It was this big candle. Short candles, they're less volatile. There's less price movement here. It was only trading between this level and this level, so there wasn't that much volatility going on. So I just moved the chart down a little bit to talk about a few more things. We're going to talk about the support and the resistance. So what the support is basically the psychological barrier price that has a really hard time moving below that value. So there's lots of buying pressure at this support level, and that drives the price up. And you could see that it bounced right here. It hit the support, and then it drove the price up, and then it went down and it hit the support. It went a little bit below it, but it still hit it, and then it came back up and drove the price back up. So that's what the support is. The resistance is the psychological barrier price that has a hard time moving above that value. There's a lot of large sell-offs at the resistance levels, and that drives the price down. As you could see, it's at the support, it goes up to the resistance, and then a lot of people sell, and the price goes down. And it tries to go back up, but then they sell, and the price comes down. Hits the support, they buy, the price goes up, hit the resistance, they sell, price goes down. And what happens is sometimes the price breaks out through the resistance, and when that happens, the old resistance becomes the new support. So you could see right here, this was the old resistance, and this is the new support. It became the new support. So now where things used to bounce off of and couldn't get through, now they bounce off of and they can't break below, or they have a hard time breaking below. And the other thing to know is that although the old resistance becomes the new support, the opposite can occur in a downtrend where the support becomes the new resistance and it breaks down and then has a hard time coming back up above this line. And what you'll see here that I highlighted in pink is that sometimes it bounces the price. It just stays between the support and the resistance for quite a while. And that's what we call range bound. This is a range bound price of Bitcoin. It's just, it keeps on staying in between these levels. And like I said before, a breakout breaks through the resistance, and this indicates a bullish trend upwards. And if it were to break down, that means that it drops below the support, and that usually indicates a bearish sentiment. And then consolidation means that it just stays range bound for a really long time. And I just want to make a quick note here that if you look at this and you say, okay, well, if the price breaks out, then usually the resistance becomes the new support, then ask yourself, would a breakout be a good time to buy? And if a breakdown usually means that it's going to be a bearish signal and it's going to continue to go downward, would a breakdown be a good time to buy? Well, no, a breakdown would not be a good time to buy. However, a breakout would be a good time to buy because that would mean that you're buying at the support. And also, if the coin goes up and down and continues to hit the support and bounce off the support, what do you think would be a good thing for you to do, or a smart decision? A smart move would be to make your buy order down at the support levels, and then you buy it at the support and you'll ride the wave up to the resistance, and then you could choose to either sell it at the resistance or set a stop loss a little bit below hand just in case it breaks out. And so that's how you could use the support and resistance for buying strategies. And there you have it. You just learned all of this. Can you believe it? So that was the basic charts. And now let's head over to Binance and check out some stuff on there. So this is the chart on Binance. As you can see, it was the same thing that I was just using. Here's the candlesticks and the wicks and all of this stuff. And over here are the bids. These are all of the buy orders at all of the different prices that people want to buy, at least from this range to this range. And then these are the sell orders of all of the different prices that people want to sell their coin at. Right now, we're looking at Monero, XMR, and the Bitcoin pairing. So they're selling Monero up here and they're buying Monero right here. And this is the price that it's at right now. And then the price between the top buyer and the lowest seller, that is called the spread. So right now it looks like there's a spread of 62 Satoshis, or 0.000062, because if you add that value to here, then it'll equal this. And if you subtract it from here, then it'll equal this. And that's the spread. And then this right here, this is the market depth. This is the volume of orders. It's a representation of all of the different orders in a depth chart. And what this does, this gives sentiment of psychological range. It gives the sentiment of the psychological range of, where the big buyers are and where the big sellers are. And it gives buy walls and sell walls. Now, buy walls, as you can see, it's a giant wall of buy orders. And it's all around this price right over here, somewhere around the 0.0314 range. And then here's an example of a sell wall, which is right around here, which is probably like 0.0318483, and there's a lot of people selling around this range. So whether you have a buy wall or a sell wall, that means that a lot of people have to get through that in order for it to move along. So a lot of people have to get through this sell wall in order for the price to go up, and a lot of people have to get through this buy wall in order for the price to go down. And here's another example of a sell wall. I switched over from Monero over to ZRX, and you could see this is obviously a huge sell wall around here. And you could also actually use the order book, the bids, to look and see where the sell wall is. And you can see right here, 26,790 ZRX tokens or ZRX coins right here is what this guy is trying to sell, and that happens to be this large sell wall, because you could see all these other ones, 17, 160, even 4,500 or 7,900. Doesn't even really come close to the 26,790. So that's a sell wall. And so those are the buy walls and the sell walls. And we're gonna head back over to Bitcoin now to talk about the volume. So now we're back over on the Bitcoin chart. I cleaned it up for you, and basically we need to talk about the volume. So these bars down here, these represent the volume candlesticks, and volume is basically the number of transactions that occur during a trade or during a specific time period. So the higher the bar, the greater the volume, and the higher the bar, the greater liquidity. So you want high volume because that will give you an easy access to get into and out of coins. Now, you'll always have really good volume with the top 10 cryptocurrencies. So Bitcoin, Ethereum, Litecoin, Bitcoin Cash, all of this type of stuff. These have really good volumes and high liquidity. So like I said, they're easy to trade into and they're easy to trade out to, and you could, use a lot of money. You could have a lot of money with these coins. Small coins, though, they have really small volume, and it's really hard to get large sums of money in and out of small coins, and that makes trading small coins very, very difficult. And lots of volume indicates that there's usually a huge sell-off or there's a huge buying power behind it. So right here, you can see like there was this huge sell-off, and the price went all the way from here all the way down to here, and this was the selling price. The selling volume indicates that. And then over here is a huge buy-in, so you could see there's a high volume right here, and there was a lot of people buying up right here. So basically the volume is an indicator of liquidity and how liquid the coin you're looking at is. And I think between this and what we covered on Binance, that should be everything that you need to know. It's all the basics, it's all the fundamentals, all the beginning stuff. So I think we're going to be good with this, and I'll see you in the next video. Alright, that was the video. I hope you enjoyed it. If you got value from it, be sure to smash up the likes, hit that subscribe button, and even turn on post notifications if you want more videos. And also, I want to mention that if you are new to this space, if you're new to cryptocurrencies, if you're new to investing, if you're new to trading, then I do have a free crypto beginner course. I'll put the link in the description below. Definitely check that out if you want to know more information and get a little bit more involved with cryptocurrencies and in this space when it comes to trading them and investing into them and basically everything you need to know about them. So check out that free course in the description below and get some good foundational information that you need to know if you want to be involved with this space. And other than that, let's get to the moon together. I'll see you in the next video. Bye.